You are listening to ChartingWealth.com for Monday, the 19th of October, 2015. How do we always start our podcast? We always start it with IYY. What is that? That is the iShares Dow Jones U.S. Total Market Index Fund. It is a fund that tracks all the stocks together in the market. We always on the program like to get a view as to what's going on in the total market, and then we break it down into the S&P 500 as represented by SPY, another exchange traded fund, index fund, and then the Qs, QQQ, which is the NASDAQ 100. Why do we do this? Because we like to see how these large baskets of stocks move, and we like to follow them and make money as they move up and as they move down. Now, again, our program is dedicated to education. We are not a stock calling service. We are not telling you to buy anything. In fact, we're giving you no instruction on that at all. We do encourage you to set up a virtual trading account, which you can do at any brokerage firm. Any online broker, you can go right now, 5 minutes, and you can set up a virtual trading account. You can fund it with $1 million, be a virtual millionaire instantly, and then start getting a feel for the markets, learning how to trade. Take our 15-minute online course that you can find at our website, or even better, you can email us and ask for it. We'll send you not only the training video and a link to that, but we'll also send you the chart that you're looking at right here. It's from freestockcharts.com, but it's our layout, and we will get that to you also. So let's jump right in. What do we see happening? Well, with the total market, it started moving up on the 1st of October. Our chart tracks first the big chart, which we call the big chart, which are 2-day candles. And we have the 2-day candle starting on the 1st of October, turning around after the market had bottomed out on the 29th of September, that candle, and then has moved up steadily since then. A bit of a pullback on the 15th, where it just couldn't quite get above a purple line that we've drawn on our chart that represents a self-imposed ceiling we kept watching the market bump up against. But on options expiration Friday, that was the 16th, for the last 11 years, the market has actually gone down 8 of those. Well, it will have now gone down 8 out of 12, because it did not go down this time. It actually surged up. So we see it pushing up strongly. The market was already in an uptrend, having crossed over on the MACD, the moving average convergence divergence, back on the morning of the 5th, and continued, that at the beginning of the candle on the 5th of October. And if we drop back to our shorter chart, our 4-hour chart, we can see how the market opened in the morning on Friday, pushed up, and then the afternoon pretty much leveled out where it was at about 101.87, up in the total market about a third of a percent or so. Now, if we go to SPY and we revert to our 2-day chart, it looks somewhat similar. It started moving up on the 5th also when there was a crossover on the MACD, the moving average convergence divergence indicator, crossing the exponential moving average line. We also saw light green blocks that are represented on our indicators. That is the derivative oscillator. It flipped over at about the same time. Always a good sign. Almost always a good sign when those two indicators move at the same time in either direction. And we saw the Standard & Poor's 500 continue to surge up until we had a red hollow candle on the 15th, the candle of the 15th of October. We do need to redraw our trend line because it's not a good trend line anymore with that down move. And we will continue to try to come up with a better trend line that'll connect 3 up candles. We only really have 2 right now, but the market did close above the trend line. If we drop back to our 4-hour chart, we see that the market is above the 2-day trend line. Again, the S&P 500 looks a lot like the total market in that moved up, surged up in the morning above the purple ceiling that we had self-imposed, and leveled out in the afternoon. It was up, S&P 500 was up 0.45%, so about 0.5% on Friday. Now, let's go back to our 2-day chart, and we're going to look at the Qs. What is the Qs? Well, that's the NASDAQ 100. That's what that shows us. And we see that it has really not had any drawbacks since it crossed over going up on the 5th. and it has moved up, moved up. It actually continued to move up on Friday, moving above the self-imposed ceiling. We have continued up movement there. As you can see on the 4-hour chart, or I'll tell those listening, it crossed over in the afternoon of the 15th and continued to move up throughout the course of Friday. That is where we are, pushing above again that self-imposed ceiling. So we have crossover going up on the 4-hour chart. Hopefully you were able to get into that in a virtual trade and have that parallel the up move that we saw in the big chart that it had reversed on when it started moving down around 4 p.m. on the 14th. And hopefully those of you who trade the S&P 500 also did the same thing in the afternoon and rode that up and are hopefully looking to see it continue to move up and parallel the up move in the big chart. Now, let's go back to our 2-day chart, and we're going to lastly look at gold, which was down somewhat for the day, actually down about 0.75%. Gold has been moving up on the 2-day chart since it crossed over back on the 17th of September and has been pushing up, had a little bit of a pullback around the 29th, the candles on the 29th of September and the 1st of October, but then continued to shoot up again, although for the last 4 days or so it has been leveling out somewhere around 113, and it was down for the day. Now, when we talk about gold, we prefer to look at our 4-hour chart, which has been dizzyingly accurate over the last many weeks. It has not yet crossed over going down. It looks like it might be ready to do that, but it also looked like it might be ready to cross over going down around the 8th, and it did not. It bounced back up, but it did not have two down red-filled candles. It had a red-filled candle on the 8th, and then on the morning of the 8th, and then on the afternoon of the 8th, it had a doji, which gave you some questions about it, but then it shot back up again on the 9th. Looks like this move with two red candles going down is a more solid down move, but it hasn't yet crossed over on the MACD, so we don't have a confirmation of a down move, but that might be coming on Monday. Continue to watch if you are someone who trades gold in your virtual account. That is where we have ended up the market for the week, and as we go into the new week, hopefully we'll continue to see the indexes move up and perhaps gold move down. Those of you who made virtual trades in gold around the 5th of October, hopefully you took some profits when gold started to level out somewhere around the 8th. Maybe you got back in and continued to ride it on up, and hopefully you got yourself out somewhere where it topped out around the 13th or the 14th. On into the 15th. So hopefully you have been doing well in gold as well as the other indexes. Again, if you don't have our charts, please email us. cw@chartingwealth.com is how to contact us. You can also ask for our training course. It's about a 15-minute course. It gives you the down and dirty on how to read a stock chart, which is the way you need to start. Plus, we have lots of great information at our website, chartingwealth.com. And again, the email address to request your free charting layout along with your training is CW, that is like Charting Wealth, CW@chartingwealth.com. Thanks so much for listening. Hope that you have a great week trading.